Hi guys, Sandra Baptist here. Remember to like the YouTube, my YouTube channel. Reminder to hit the notification bell. And today we're gonna get into what the P&L is comprised of, what the profit and loss is comprised of. I talked about the balance sheet in the previous video, so go back and look at that if you need to. Today, we're going to just delve a little into, what the P&L is comprised of. Everybody should know what a P&L is, but some people, don't. So the P&L is, P&L, I would say P&L, but it's the profit and loss or the income statement. So I would use those interchangeably. So don't get confused. Okay, but quickly, I would say P&L, right? So the P&L shows you over a period of time what you made and or what you lost over that period of time. It stretches from one period to the other, right? Whereas a balance sheet is at a particular point in time, the P&L is going to go over a period of time. So the P&L for, let's say, June 30th, 2023, for the year ended June 30th, 2023, it's going to show transactions from July 1st, 2022 to June 30th, 2023. It's going to show all the transactions for that period of time, right? So it's important that you know the difference between the balance sheet and the P&L. A lot of people think they do, or they may say they do, but we sometimes see transactions going between the two different reports, and we realize that this transaction should be on the balance sheet or the P&L versus the P&L or vice versa, right? So we realize that some persons don't know what transaction belongs to what report, right? So the profit and loss, back to the profit and loss. The profit and loss of the P&L is going to show you what you made over a period or what you lost over a period. It's going to show you your sales or your revenue. That's the top line. We always start with sales or revenue at the top of the P&L, right? Then you would have if you're in retail, I'm going to tell you I'm going to talk about if you're in retail or if you're service-based. So if you're in retail, you will start with sales, right? Sales for the year, whatever it is. Then you are going to have your cost of sales, which are going to include your direct costs, your material costs, your freight to bring goods there, any taxes that you need to pay to bring the goods to your store or retail business, any duties you would have to pay. So all of those go into the cost of sales. As we go through the series, I am going to delve a little bit more into, what is what. But again, if you really need that support, then join us in the Financial Management Academy. So we start with the profit and loss. In the profit and loss, we start with the revenue or sales if you're in retail. And then if you're in retail, you would have cost of sales. And then you would have a gross profit. And then in the P&L, you would have your operational expenses or administrative expenses, whatever you want to call it. So those administrative expenses could include office supplies, rent, payroll, vehicle expenses, any other expenses that that you need to operate the business would come in the administrative section or the operational section, right? But if you're in retail, you have to separate that out. You have to separate out the cost of bringing the goods to your store, and because it helps you or it helps your accountant to see how much you're making from the sales of the goods, right? Not including your operations, right? So it's important that you separate that out. So you'd have your sales, cost of sales, gross profit, then your administrative or operational expenses. And then you would come down to your operational profit or loss, and then you may have other things like depreciation, etc., to come down to your net profit or your net loss. So that's what the P&L would look like for a retail business. For a service-based business, everything basically remains the same, except for services, we don't have a cost of sales section, right? Because think a bit, if you're in the service-based industry, you would just have revenue at the top, your services, whatever, you're a web designer, you're an accountant, anywhere you're providing a service, you would have the services, and then you would just have your operational or administrative expenses to come down to that. Sorry, to come down to the net profit figure. Okay, so that's a little overview of what the profit and loss is. And go back to the balance sheet where I talked about the balance sheet, so you know the difference. Why I'm doing these videos is because we always see, everybody thinks that they know where to put a transaction, but sometimes when you have clients or accounting personnel putting in transactions, they don't know where to put the transaction. And once that transaction is in, then it automatically feeds into the report. So you have to make sure that you know what the transaction is about. Should it be in the balance sheet? Should it be in the P&L? What is that transaction about? So when you try and post it or code it in your accounting software, and it does not come out right, or it does not look right when you are reviewing your statements, or when your accountant is reviewing your statement, then you need to go back to those transactions to see where exactly did we put that item. Why is this looking off? So as we say, junk in, junk out. You have to be able to have the accounting system set up properly, and you have to know where the transactions go. Should this be in the P&L, or should this be in the balance sheet when you're posting it? So I hope that has been helpful. I hope I've been clear. Let me know in the comments, and you can ask me any questions that you have. And again, join us in the Financial Management Academy, because I get really into depth there, showing you how to build the balance sheet, showing you how to build the P&L, showing you how to build a cash flow and what should be where in what section, etc. So bye. I'll talk to you again soon. Take care.